The entire global financial system runs on a concept that sounds like magic, turning $1 into 10. This isn't a theory. It's how banks operate every single day. It's called fractional reserve banking, and it's the most important and controversial concept in finance. But this magic has a dark side. Critics, like economists from the Austrian school, call this system fundamentally fraudulent. Here's why. It started with goldsmiths, who realized not everyone demanded their gold at once. They began issuing fake receipts for gold that didn't exist. Sound familiar? Today, when a bank lends out your deposited money, you can technically demand back anytime critics argue it's a breach of trust. They are lending something they don't truly have exclusive ownership over. As researcher Manuel Tacano argues, this is an infringement of property ownership rights. Beyond the ethics, this system creates the economic cycles every trader lives and dies by. The first people to get the new money, banks, their clients. Big corporations get to spend it before prices rise. They win. All this easy credit distorts prices. It funds shaky zombie companies and speculative bubbles in things like tech stocks or housing. The 2008 crisis is a prime example. When the bubble pops, the recession that follows is the market's painful way of correcting those errors. And in a crisis, your deposits themselves might not be safe. Governments have now legalized bail-ins where a failing bank can use your uninsured deposits to rescue itself. The criticism goes even deeper. From a religious and legal perspective, creating money out of nothing is seen as immoral. Islamic scholars and Christian moralists argue that money should be a stable measure of value, like a ruler. A ruler that constantly shrinks and expands is useless and unjust. By constantly creating money, the system devalues everyone's savings and purchasing power, a hidden tax on the poor and fixed income earners. It's creating wealth without work, which many ethical systems condemn. So, what's the takeaway for you as a trader? Fractional reserve banking isn't just a dry topic, it's the script for the entire financial game. It explains why asset prices can inflate to dizzying heights. All that created money has to go somewhere. Why the business cycle of boom and bust is inherent to our system. Why understanding central bank policy is crucial. They control the reserve requirements and interest rates that govern this entire process. By understanding this dirty secret, you're not just watching the market, you're understanding the engine room. You're no longer a passenger, you're the navigator. If you learned something game-changing today, smash that like button, subscribe, and hit the bell for more content that gives you a true edge in the markets.